I think that an institution would use the Bitcoin ETF just like they use GLD for portfolio completion. Even though they could get spot in other ways, the ETF, again, easy access. Nobody has to, there's no contracts. They can get in and out when they want. It's liquid enough that they're not going to move the market around. And they'll just add a little on to complete their portfolio. So they should be a decent audience for this in the future.
It just got a whole lot easier to invest in Bitcoin. The first US exchange-traded funds that invest directly in the token have begun trading after they were granted approval by US regulators. Here's what you need to know if you're eyeing the new spot Bitcoin ETFs. Of course, there are many things to be mindful of before investing. The big one with Bitcoin is volatility, which essentially means big price swings, and that may be too wild a ride for many retail investors. And because they're ETFs, you can just buy them using your regular brokerage account. While all brokerage firms are not offering access to the ETFs, there are some big names behind them, such as BlackRock, Invesco, and Fidelity. The beauty of the competition means that issuers are slashing their fees in order to attract investors.
So a spot ETF trades very similarly to a futures ETF. It trades on traditional exchanges, it tracks price movements of Bitcoin, but each one spot Bitcoin ETF is backed by one real Bitcoin in the company's treasury, in their reserves. So this solves pretty much all the problems we just mentioned. At all times, even if you're a whale, you're an institution, for one Bitcoin spot ETF you buy, one contract, you know there's one Bitcoin held in the treasury somewhere, and you can ask for that back. You always know that the supply and demand economics are there, all the benefits you get are there, and you don't even need to pay high amounts of fees because there isn't that mechanic of constant rebalancing and both sides of the futures market paying fees on top of each other in order to make this futures contract work. When there's one-to-one backing, you don't need to charge high fees. So this is why a spot ETF is so important.
Welcome to DRJ Crypto News Update. Welcome to episode 64. Subscribe now. Bitcoin ETFs are becoming a focal point in the financial world. These ETFs aim to simplify Bitcoin investment for institutional and retail investors by eliminating the complexities of crypto custodianship and reporting. However, challenges remain, including regulatory skepticism and the need for these funds to accumulate substantial assets quickly. As of now, only 39% of financial advisors anticipate their approval this year, reflecting cautious optimism. Bitcoin ETFs are being seen as a transformative step for institutional adoption of cryptocurrency. These funds allow investors to gain exposure to Bitcoin without needing to manage the complexities of wallet custodianship or security. ETFs provide a bridge for traditional investors, making Bitcoin more accessible while potentially driving its price higher as demand increases. They streamline investment processes, especially for institutional players who control significant wealth. Regulatory uncertainty persists, particularly in the US, where skepticism about crypto products remains high. ETFs must attract substantial capital to influence Bitcoin's price meaningfully, and skepticism among advisors, only 39% believe in approvals in 2024, reflects these hurdles. This development highlights how traditional finance continues to intersect with blockchain technology, signaling potential shifts in global investment strategies. what you think of today's update. Thank you very much. See you on the next video.